We've got an earnings alert on Intel. The stock getting crushed after reporting earnings moments ago. That conference call is underway right now. The stock is down 7%. Josh Lipton's in San Francisco with the details. Josh.
So, Melissa, quickly checked in with a couple analysts who cover the name just to get their take. Susquehanna's Chris Rowland. Listen, obviously, he talked about the business unit, CCG, chips for PCs, modems, $9.8 billion. That was weaker than expected. Company called out weakening modem demand. Of course, we know Apple's a customer there. DCG revenue, so chips for servers, $6.1 billion. That was also weaker than expected. In part, their cloud customers not spending as much. I asked Rowland why he remains a bull at this point. He said, listen, they are still a leader in the data center and growing opportunities in memory and networking markets. Also caught up with Ruben Roy from MKM. He thought Intel was likely leaning on the side of conservatism as they did in 2018. He acknowledges that he did expect higher revenue guide for the full year. On a positive note, he said Intel is guiding operating margin to 34% for the year. CFO Bob Swan, Melissa, interim CEO as well. He is leading this call. He started off by talking about strong cloud demand, PC market stabilizing. They gained share in modem, though he also acknowledged, listen, there are some challenges as well. Take a listen to that.
We expected a stronger finish. Fourth quarter revenue of $18.7 billion was up 9%, but short of our expectations as a result of a dramatically weakening modem demand, slower overall growth in China, cloud service providers absorbing capacity, and a weakening NAND pricing environment.
Bob Swan actually started off the call, Melissa, with a question obviously a lot of investors have. Who's going to have this job permanently? It's been 7 months since Brian Krzanich resigned. Bob Swan simply saying the board continues to evaluate candidates and proceeding, he said, with urgency. For more on this, Bob Swan is going to be on CNBC tomorrow talking about all these issues, and I'm sure a lot more. So be sure to tune in for that interview. Melissa, back to you.
When Bob uses the word dramatically slowing, Josh, are you getting a sense as to what is behind that? Is it the trade war? Is it volatility in the markets? I mean, what's driving this sort of drop off that they saw?
Yeah, it was interesting. I mean, listen, there are some specific issues, and you heard him rattle off there. Yeah. But he did say that trade issues, weakened economy in China were perhaps getting worse, more pressure there than they initially forecast, and that was having, as he said, trade and macro concerns, especially in China, his words, have intensified. So that perhaps showing some light here on their forecast, Mel.
All right, Josh, thank you. Josh Lipton bringing us up to date on Intel, which is, again, down about 7% right now. Dan, what do you make of this?
Yeah, I mean, it kind of connected to that comment that we made about Workday and the enterprise environment, you know, in the A block here. So if corporations are seeing, or don't have a lot of visibility, then they're not going to be ordering much. And we also know, you know, Josh mentioned a couple times modems. We know those going into smartphones. China, they did talk about, Swan did mention the impact of geopolitical situations. So with the lack of visibility, you know, markets can turn on a dime, orders can turn on a dime, stocks can turn on, economies don't turn on a dime. Do you know what I'm saying? So this is going to take itself some time to work through. And here's a cheap stock that a lot of people, myself, some other people on this desk, wanted to kind of get behind into 2019. They just lowered guidance for the quarter we're in by 7.5% on sales. And that's why the stock's down 6.5%, and it should be down 6.5%.
Well, is any part of it, though? Today was sort of, I mean, obviously the space went nuts, right? And so...
Okay, so Xilinx that has $3 billion in annual sales was up 18%, and Intel that has $70 billion in annual sales is down 6%. I'd rather probably go with their outlook for 2019 than what Intel or Xilinx had to say.
That wasn't my question.
Oh.
But
you're saying all the chips rallied big, and so as part of this, just getting back
part of the gains that
were made.
If they had announced that Western Digital, we also see, right, they're down a little from, but they didn't give back all of their gains for today on, I guess, a little disappointing earnings. If either of those had announced these earnings a week ago, let's say, where do you think the stock would be?
These stocks? I mean, listen, I think you can look around. I mean, like, look at LRCX, Lam Research was up, 10, 12%. It's still down 30% from its 52-week highs. Xilinx made a new all-time high. I think Xilinx is on a short list of companies that will be bought, too. So, you know, I think it's really different pockets here.
Sounds like Dan watched a power pitch a few weeks ago about Xilinx.
Oh, your Xilinx.
Really?
No, it's interesting. So quickly, Western Digital, Karen mentioned, and you're right, it was up 6.5% or so today. It's given back maybe a third of that. But you talk about, you want to see what happens when a company gets, or business gets commoditized. Take a look at a Western Digital chart over the last basically 15 or 16 months. That's what's going on. Now, people will point to valuation, and they've pointed to that for the last $25 or $30. Valuation doesn't matter when basically your average selling prices continue to go down. That's what's happening in WDC. In terms of Intel, not only did they lower revenue, they lowered EPS guidance by about 13%. So I think this move to the downside is probably justified.
In contrast to Intel's fallout after hours, chip stocks staging their best day since 2009 today in the regular session. Our next guest says there is one stock to play for an even bigger breakout. Let's get off the charts with Ari Wald, head of technical analysis at Oppenheimer. He's over at the Plasma. Hey, Ari.
Hey, let's start with Intel. First off, the big drop after hours. This puts the stock below its 50-day moving average. Tomorrow morning, keep an eye on 47.50. The stock, as it stands now, should open below there. If, we could stage some sort of a rebound above there, then you have a little bit of a silver lining for the bull case. But I think it's too early to really jump ahead of it as it stands in the charts. And here's why. Let's start with a bigger picture view of Intel going back about a year now. What's interesting to us is where this selling took place. Right at $51. This has been the key resistance level since August now. So as we sell off here, it looks like there's going to be some additional backing and filling needed. Here's the positive spin. This stock's already in its basing process. This stock made a higher low when the rest of the market was in free fall in December. So I wouldn't get too downbeat either. I just think there's some additional backing and filling needed before it could start moving higher again. And that's really the case for semis overall. Looking at the Philadelphia Semiconductor Index, this is the great leading indicator of the market, I think, as it stands right now. We'd really like to see this start to move higher and see additional strength from what we saw today. Here's an index that peaked ahead of the market. It peaked back in the first quarter of 2018, really started to top out ahead of the market and broke down before it. Now it's corrected, and I think where it's starting to base here is important. This is an important retracement level of its bull market dating back to 2016. It's a 38.2 retracement. There's also some support here from last year. So still have to deal with the 200-day moving average. More work needed, but some incremental strength here, some less bad selling. It's a start. I still want to be selective. Here's this chart that stands out for us. While the entire semi index is below its 200-day moving average, Advanced Micro above a rising 200-day moving average. It didn't have the same topping process as semis overall. It had the big breakout above multi-year resistance dating back to its 27 highs. Typically, resistance becomes support. We're seeing a double bottom there. I think this is how you want to play it. This is relative strength. We like leadership. AMD, best of a mixed semiconductor industry.
So, Ari, when you said that semis seem to be a leading indicator of the market, does that mean you think the market's going to go lower?
I think the market's in a basing period here. And speaking for semis, I think improvement in semis will lead to improvement in technology, and that's going to lead to improvement for the market overall. I think that should play out through the course of the year. We're of the view that the market is currently basing. Now, after this oversold bounce, I agree there should be some retracement here. We might not have to make it all the way back down to the December low, but at least a higher low for the S&P. As this price consolidation plays out in the first half of the year, I expect selling to get less bad. I expect cyclical sectors like semis to start to show improvement. And then I think we can see a new bull market come the second half of the year.
All right, Ari, thank you. Good to see you. Ari Wald of Oppenheimer. AMD is an interesting name. It's a stock that had benefited from Intel sort of being caught flat-footed when there was a turnaround in PCs last year, unexpectedly.
Right. No, AMD has done relatively quite well. And you look at the chart, I agree with Ari, bounced right off the 200-day moving average. So, assuming if you think the market's going higher, this is probably not a bad place to be. My concern is when you listen to what Intel is saying, almost every single company out there has said something happened at the end of the year. We expected a stronger finish. Something happened to the global economy in December, and that concerns me about all stocks.
We look for tells. So I think tomorrow you might get an interesting tell with AMD specifically. So if AMD manages to close flat, to slightly higher tomorrow, given what Intel just said, I think AMD in the earnings, to Ari's point and to BK's point, on the 29th, I believe they report, looks really interesting. If they can shrug off this Intel news, they'll be saying, you know what, we've sort of moved away from what Intel does, and now we're the best in breed.